recording will be sent to those that attend. So here you go, Sean, you can do your thing. So
Okay. Well, thank you so much, Bill, for inviting me today. It's a pleasure to be here with everyone. Looks like we got a lot of participants on the recording. And I'll just introduce myself. I'm Sean Braden. Bill did a little bit, but yeah, I'm a financial center manager at Fifth Third Bank, and I've been in banking for almost 9 years now. And I love talking to small business owners such as yourself and giving them solutions and giving them an idea of what they're going to need when it comes to the banking side of things, which is opening business checking accounts and savings accounts, and also the lending piece and in gaining access to capital for your small business. So today, my presentation is going to be going over basically the different kinds of financial statements that your small business is going to need for someone like myself, for a representative or a manager at a bank. All right. And you're going to need this not only for us, but also maybe possible investors in your small business. You need to show that you are profitable. You need to show that you are sustainable. And if you can show that and you have history with those things through financial statements, you're going to have better access to capital and to investors for your business. So with that said, I'm going to share my screen here and let's make sure. Let's see. We're going to go there. All right. Can you guys, Bill, can you see that? I'm guessing so. I don't know if I can. Let's see. Yes. Oh, thank you, Simone. I appreciate it. Kayana, Angelina, perfect. Thank you so much. I appreciate it. So yeah, this is our presentation here at Fifth Third Bank when it comes to financial statements. So some things once there we go. So by the end of this workshop today, going over financial statements, you will understand the importance of financial statements for small business operations and strategy. You will be able to recognize the uses of three common financial statements. We're not going to talk about all of them, but we're going to talk about three main ones today. And you'll learn what information is found in a balance sheet, profit loss statement, and cash flow statement. So those are the three that we're going to look at today. All right. So the importance of financial statements. I mentioned a little bit when it comes to the bank side, but financial statements are written records of business activities and the financial performance of a company. All right. Your business financial statements map its financial health in the past, present, and future. They show where the money came from, where it went, and where it is now. Financial statements show you if your business is growing and how well it is competing. And they also show lenders and investors, such as myself. I am a small business lender here at Fifth Third Bank. It shows us and investors its profitability and if the business is making good financial decisions. So what's the story? What story does a financial statement tell you? All right, this is you, the business owner. So these are the questions and what they show. All right. In the past, these are questions you should ask yourself. Is my business being competitive? Is my business growing? Am I building equity that will provide long-term stability? So those are past questions you could ask yourself. In the present, these are present questions you can ask yourself. Where should I be spending my time, personal, and funds? Am I on track to achieve my goals? Am I in a positive equity position? And I'll go over that here in a little bit. And future questions you can ask yourself. Are there patterns or trends? Is my business profitable enough to take on more loans or debt? Can I repay these loans in the future? Do I need a loan for my future projects? That's where a bank, that's where an investor can come into play to help you for those, maybe some of those future goals or present goals. Okay. And then from our side, these are the questions that we may ask if you come into a bank or you are meeting with an investor for your business. These are questions we may ask. All right. And these are what we need to see, you know, how you did in the past, how you're doing in the present, and how you're doing in the future. And these are possible questions we're going to ask. And that includes past questions. Could be, does the company make smart financial decisions? Has the company paid back previous loans? If you already have existing loans or had existing loans in the past, did you pay on time? Did you pay them off early? Did you pay on time and just, you know, pay out throughout the whole term? All are great things. And where it could get a little dicey is if you didn't pay on time, right? Or you unfortunately maybe defaulted on a loan. Those are bad things, just like a personal loan. Business loans, same principle, okay? Is the company profitable? Has the company been profitable in the past? We're going to maybe ask that question. Has the company built equity since its initial formation? Have you built equity through the past 2, 3, 5+ years, right? Present questions we could ask: how much cash is available to support a new loan? You know, sometimes you need cash to secure a small business loan. It is possible. I just did one last week for a customer who had no business credit, but needed to show that he could obtain business credit to secure a deal with the city. And it's possible that sometimes to get a loan and to get business credit, you may have to secure cash to get that loan. But once you get that loan and you use the loan and you pay back on time through monthly payments, that helps establish business credit, just like personal credit. All right. So sometimes that's needed. Another question: how is a company currently using its capital? Okay. So if you have an existing line of credit, or capital could be your own cash. So let's say you are doing great and you are not in need of credit cards or lines of credit for your business, and you are just using cash. Well, how are you using that cash? Are you saving it? Are you reinvesting it in equipment? Are you reinvesting it in additional space for your business? So those are things we could ask. Another question is, what are the company's current income and cash flows? We'll talk about cash flows here in a minute. What are the company's current goals? You know, where do you see yourself, you know, in a year from now, let's say, because we're talking about present questions, right? So, you know, where do you see yourself by the end of the year, fiscal year? That could be something we ask, because future questions we will ask is, can the business afford more loans or debt? Okay. So we're looking at your past performance. We're looking at your current performance. Will all that information lead to you being able to afford a loan or more debt? And that's fine. That's why we're here, right? As a bank, as maybe an investor out there, because we see that, you know, if you're performing well, you know, the opportunity is going to be there, because if you really need some capital from us and you don't have your own capital on hand, that's where we can help. Also, how will the business use the loan? So we're always going to ask, just like with a personal loan, we're going to ask, what's the purpose of this loan? Is it to gain capital, to purchase inventory, to purchase a piece of equipment, to purchase an auto, to purchase real estate? Or do you just need a line of credit that's just there for when you need to maybe make payroll? Let's say you're expecting a check from a job that you completed, right? And you have not received the check and payroll's due on Friday. You know, you might need that line of credit to get you through until you receive that check to pay your employees, as an example, right? So we need to know, what will the loan be used for? Another question is, are there trends in the industry that hurt or help your business. So we may ask, how's it going? Are you seeing anything that might be of concern for your business, right? And last question, what assets are available to secure a loan in case of default? I can tell you this, banks and investors, well, I should say banks, investors, are probably not going to ask for security or, some sort of equipment or real estate or auto, let's say. But us as a bank, if you have something that we can put a lien on, so to speak, just like with a personal loan, like a residential home on the personal side, if you have commercial real estate, or if you got a piece of equipment even, or an automobile that you use for your business, that's going to help secure a loan much more quickly, and approval rates go up when there's a piece of collateral involved versus an unsecured loan or line of credit. Unsecured are possible, and we do those here at Fifth Third Bank up to a certain limit, but you're going to be able to maybe get an approval quicker and have a better chance at it when there's a piece of collateral involved. So poll question time. First question, there's going to be about 5 or 6 of these. So what I would like to do is I would like to use the chat room to see everybody's answers for this first poll question. And the question is, what do financial statements reveal about your company's past, present, and future? And if you would like to put your answers in the chat, that would be great. I will give you a clue. It will be multiple answers, just to give you a clue. Okay, Angelina, A&E, Esther, C&E, Simone, A&E. Okay, all right, I'm liking this. I'm seeing ACE, ACE, CE, A&D. I'm seeing another ACE, another ACE. I'm seeing a lot of aces. Very, very good. Guess what? Those that answered with ACE, you got it. A, C, and E. What do financial statements reveal about your company's past, present, and future? Is my business growing? Am I on track to meet my business goals? And are there financial patterns or trends? Very well done. You are all aces in my book. All right, so let's continue. We now have the story. This is question number 2. So this is about me as a lender, right? What do financial statements reveal to lenders and investors, of course, about your company's past, present, and future? Once again, use the chat room to answer, and clue, another clue, multiple answers on this one as well. CDE, DE, DE, CDE, CDE. Okay. DE, CDE. All right, you guys are on it today. Well done. Yes, it is. Once I click on it, it is CDE. Yes. Am I on track to meet my business goals? How much cash is available? Can the business afford to take on debt? You guys have been paying attention very well. I appreciate that. Well done. All right, next slide. So like I said earlier, we're going to talk about the different types of financial statements. Only going to concentrate on 3 today: balance sheets, profit loss statements, and cash flow statements. All right. So balance sheets. So the definition of a balance sheet is usually a single page. It provides a snapshot of your company's financial picture at a point in time. A balance sheet shows business assets and their value, total current liabilities or money owed. Okay. So basically any outstanding loans that the business has or any kind of debt the business has. And it shows value of the shareholders' equity. So the business net worth. So what it ultimately shows a balance sheet is, it's going to show assets over liabilities. And the net from that, if assets are more than liabilities, that's your business net worth. It's that simple. Okay. So the balance sheet also helps track the stability and resilience of your business, the liquidity of company assets, and whether you are collecting on or paying invoices in a timely manner. Okay. So I talked about earlier needing a line of credit because maybe you were waiting on an accounts receivable, right? I'm waiting on this AR from XYZ company for a job I did. Are you collecting within, let's say, 30 days of that job? You complete the job, you send an invoice. Are you receiving that money back in a timely fashion? Typically 30 days is a good amount of time. Hopefully you get it sooner, right? Or the flip side of it is accounts payable. Are you paying your bills in a timely fashion? And it's a two-way street. You want to get money in from a job you did, but maybe you needed to buy materials from ABC company to help with your job that you did for XYZ company, right? So are you doing your accounts payable, or are you paying your bills on time, right? So that's what a balance sheet helps you do, and helps you show how you're doing in those areas. Next slide. We got another poll question. So whoops. And I just went through, oh my goodness. All right. Well, I gave this one away because I was looking for the chat room. My apologies. I clicked too soon. So poll question number 3, a balance sheet provides a snapshot of your company's financial picture at a moment in time. Which 3 things does the balance sheet show? This is what I was talking about. Money owed by the business, right? Accounts payable. That's what we call that. Owner's equity, assets minus liabilities. How much equity does the business have? And assets the business owns. It's very important to know what the business actually owns. It could, and I've said this before, it could be real estate that's in the business name. It could be equipment. It could be automobiles, right? Just to name a few. It could be inventory as another great example of assets, okay? So once again, my apologies. I clicked way too fast on that. That's okay. But moving on, we got some scenarios as well. So Joe's t-shirt print shop's going to be coming up here a few times. And here's the background of Joe's t-shirt print shop. This is just a scenario. They produce custom t-shirts for businesses and other entities for company promotions and events. They also, Joe recently secured a new contract to provide 2,000 custom t-shirts to Solus Software, a software company, for a staff training event. All right. To fulfill the contract, Joe needs to purchase the 2,000 shirts ahead of time, which costs $10,000, and extra ink for his t-shirt printers, which run about $4,000. Okay, so now we're looking at Joe needs about $14,000 already, right? He needs $4,000 for ink, $10,000 for the shirts. However, Joe won't invoice Solaris Software until he delivers the shirts. Solaris Software usually pays the bill 30 days after it receives the invoice. So there you go. There's that 30-day, hopefully 30-day or less rule that I like to think that businesses implement, right, to pay their bills on time. So Joe will need funds, termed working capital, to pay for all the upfront costs of fulfilling the order. Additionally, Joe has an ongoing stream of smaller client orders that he will need to fulfill. Joe currently has a line of credit with a credit limit of $20,000. Okay, so on the surface, looks like thanks to that line of credit that he's got, he should be able to cover this, right? So poll question, and you guys are not going to know, we didn't go through, Joe's actual assets, liabilities, how much of Joe's line of credit would be available to tap into for this software t-shirt order. How much of the notes payable will Joe have to pay back in the next 12 months? And is Joe in a positive equity position? Some of this information was not provided in the last slide, but this kind of gives you an idea of what to look for your own business. You need to know your assets. How much total assets do you have? That's cash, that's equipment, like I said, cash, real estate, equipment, inventory, just to name a few. So he's got over 66,000. His liabilities are only at 37,500. So for this t-shirt order, Joe already has used 10,000 of his line of credit, but could use 10,000 more. Okay. Joe will have to pay back the 5,000 of his notes payable in the next 12 months. And yes, Joe is in a positive equity position because his equity is greater than his liabilities. Okay. So you have to just to sum up this scenario, you got to know where you stand with your assets and your liabilities, and how much of, like, if you have existing lines of credit or maybe a credit card, how much is available. These are things you need to always need to know as a business owner, right? And you need to know, poll question number 7, how much of notes payable or accounts payable is Joe going to have to pay back in the next 12 months? All right. You need to know how much you need to pay out, right? And that's part of the equation. So ultimately, when you add up all this, because he has almost $30,000 in business equity, that's more than enough to cover the additional 10,000 that poll question 6 asks. And that's more than enough to cover the 5,000 that he's going to need to pay over the next 12 months in notes payable or accounts payable. All right. So he's still positive. And that's where you want to be as a small business owner. You want to take on jobs, but sometimes you got to put the money up front to pay for materials to fulfill an order, right? And to get paid. All right. So let me go to the chat. Let me just make sure. Okay, there's no questions. And like Bill mentioned earlier, once I get through this, we'll open it up to Q&A. All right. And I will answer your questions to the best of my ability. But please let me know if I'm going through this too fast, and I can most certainly slow down. All right. But the next thing we're going to look at is calculating working capital. And to calculate working capital, find current assets and subtract current liabilities. Okay. The requirements of businesses for working capital vary. In general, aim for current assets to equal 2 times current liabilities. Okay. So what's that mean? Well, if you have 100, well, let's say you have 150,000 in assets. Okay. You don't want to have more than 50,000 in liability. So you want 2 times the current liabilities. Actually, I'm doing that wrong. I am so sorry. So if you have 100,000 in assets, you don't want to have more than 50,000. You want to be 2 times. You want to more than, you basically want to double your liabilities with your assets. I'm sorry, I did the math wrong there. All right, so 2 times the current liabilities. So just keep that in mind. So if you have 50,000 in liabilities, you should have at least 100,000 in assets. And that includes everything: cash and material and buildings and real estate, everything, right? So keep it 2 times that amount. All right. Profit and loss statements. So this is the next financial statement we're going to go over. A profit and loss statement shows much of the company and what they made and spent over a specific period. A P&L is also called an income statement or an earnings statement. What a P&L shows is a company's financial performance over a specific period, typically like a year. It shows sales revenue. It shows other income. It shows cost of goods sold. It shows gross profit. It shows overhead costs or operating expenses. And that could be, seriously, if you already have employees, I mean, you have to pay them, right? That's an overhead cost. Do you provide insurance for your employees? That's part of overhead cost. If if you have an outstanding loan or a line of credit that you're paying monthly on, that's overhead costs. Those are just some examples, right, of operating expenses. And there could be other expenses not related to operations they have to factor in, okay? And then it's going to show you your net profit, all right? So you're going to show, P&L, you're going to show everything that made you profitable, but then you need to show everything that was a loss or a cost. And then you subtract the two numbers and bam, you have a net profit. So P&L tracks profit centers and trends. It tracks places to reduce expenses, and it tracks growth trajectory. Just to name a few things. So this for us as a bank, this is one of the ones that we definitely like to look at, along with the balance sheet. Okay, and we'll go through cash flow here in a minute. Now, here we go. What does a P&L or income statement reveal about your business? So let's go to the chat. I am not going to click. What do you feel like an income statement reveals about your business and a P&L? And once again, it's going to be multiple answers. BCD, BCD, BD, BCD, BCD, ABD. Okay. Very good. All right. So let me get here to my part. Okay. We're on poll question number 9. Thank you so much for answering. Those that answered BCD, you are correct. Well done. A lot of you did. So a P&L or an income statement are going to reveal overhead cost, the business's financial performance over time, and not net profit over a specific time period. Thank you so much once again for participating. Well done. Many of you answered that way. And once again, we're just going to act like we know this information already. So I'm going to go ahead and click the next one. All right. And so we're going to say, and we already know that Joe has provided his sales revenue. All right. So what was Joe's t-shirt sales revenue? All right. It was over $968,000. Okay. That's what his P&L told us. His P&L also told us that his cost of goods sold was just a shade over 400,000. So that's good, because then the net is the difference between those numbers. You always want to make sure your sales revenue is more than your cost of goods sold. You got to know how much your items cost, and then you sell it for more, right? And that's what Joe's doing here. His gross profit was over $566,000. During this period, Joe's business accrued an overhead or operating expense of $462,500. So if you subtract that, because remember, you need to know, how much your overhead cost is. And I mentioned a few examples of that. All right. So that's what this number is. So, if once you take that out of the equation, his net income or profit was $103,560. So you want to know how much you made. That's great. But how much did it cost to make you that item or items? All right. And that's between questions 10 and 11. Then question 12, what's the difference between the two? Hopefully it's positive. In Joe's case, it is. And then from there, you need to subtract out all that overhead, payroll, insurance, outstanding loans or lines of credit that you make payments on, right? Just to name a few. You got to subtract that out. And then ultimately, that's where you get your net income or profit. And that ultimately is what a P&L shows you. All right. So that is that. And now we're on to the final example of a financial statement we're going to go through today. The good old cash flow statement. The definition of a cash flow statement is it reports a company's inflow and outflow of cash over a specified time period. Cash flow statements show cash earned and spent in 3 areas: operation activities, investment activities, and financing activities. Cash flow statements help track where cash is coming from and where it is spent, and availability of working capital, and it also helps track your growth. All right, let me move that. There we go. So we got another poll question. Let me get the chat room back up here. All right, poll question number 15. What 3 business activities are reported on a cash flow statement? ADE. Seeing a lot of ADEs. Wonderful. You guys are knocking it out of the park. Well done. Yes, it's ADE. Well done. John, yeah, John, you might have thought, I think you meant to put E right instead of W. Oh yeah, on the keyboard. There you go. You got it too, John. So yeah, those are the 3 business activities we're looking at when it comes to cash flow: operation activities, investment, and financing. So thank you once again, everybody, for joining in on that. And yeah, so we're going to talk about some of these here. And once again, we're going to go through and act like we already know this information. Joe's already provided us with this information, with this cash flow statement this time around. All right, so questions 16 through 20. All right, Joe gave us his cash flow statement. And where's the source of his incoming cash? Well, his cash is coming from sales, accounts receivable paid. Okay, so something to keep in mind is sometimes you may have accounts receivable that have not been paid yet. You send an invoice out and you're expecting to receive those funds in a timely fashion, but maybe it's the end of the month and you haven't received them. And sometimes for accounting purposes, you're going to account for it, but it's not quite income, right? It's out there, but you technically haven't received it yet. So in this case, when it comes to cash, we're only going to account for actual account receivables that have been paid. And also, as we know, Joe had to tap into that line of credit, right? So you have to account for that. I think it was $10,000, right? So he needed to draw $10,000 off his line of credit. We're going to put that in there as a source of incoming cash. Number 17, Joe used cash to pay for the inventory, for the expenses, and for his loan payment. So he used poll question 16. He used all those sources of cash to help pay for his inventory, for those t-shirts, for the expense, the total expense. Because remember, he not only had to get, buy t-shirts or inventory, he had some ink they had to get too, right? So he had inventory and he had some expense, and he had to, he drew on his line of credit. He already had drawn $10,000 on his line of credit previously before this job, right? So that's part of the equation. Every month, if you draw on a line of credit or if you have a loan, doesn't matter if it's a business loan or a personal loan, you're going to make payments each month, right? So that expense is part of that question right there. Now, Joe also decided to pay himself $5,000 for the month. All right. As we saw, the business, based on his P&L, the business had, I think, made over 105,000, right? So Joe decided to pay himself 5,000 of that, okay, as the owner. You want to get paid as the owner eventually, right? You do these jobs, you get money in, you pay your expenses, you pay your people, and at the end, you want to pay yourself, right? That's the ultimate goal. So he decided to pay himself a little over 5,000. The shop's ending cash balance was $16,346. That's, hey, as long as you got something left in the bank account at let's hope it's Fifth Third Bank or wherever you bank. The ultimate goal is not only to pay yourself, but to still have some left over, because you never know what's going to happen the next month. That it's important to have plenty of cash available have good cash availability, and also a line of credit. As I mentioned earlier, very important just in case you need it, right? To keep enough cash on hand to cover operating expenses, Joe will, excuse me, Joe will have to use his line of credit to purchase the $14,000 in inventory required for the Solus software job. Well, that's just a rehash of the scenario a few slides ago. We know that he was going to use, part of his $30,000 line of credit that already had $10,000 drawn on it. He needed an additional $14,000 from it to help cover the upfront cost and expenses of fulfilling this order. So, and that should, based on that math, he already drew 10. He needs to draw another 14. He has 30 available. That means he still has 6,000 left on his line of credit, just in case if something else pops up the following month. He's still got some wiggle room there, and that's what you want. You want wiggle room in your lines of credit, and you want some, or credit cards, and you want wiggle room with making sure you still have cash in your bank accounts for the business. Okay. So in summary, so that's what we look for in cash flow. We're trying to see and and try to paint a picture of how you're using your available funds or cash. All right. And it also mentioned investment. So Joe had a little over 15,000 left over, right, in cash. Maybe Joe takes 5,000 of that if he feels like he can part ways with 5,000. Maybe he wants to open up a certificate of deposit with some of that cash that's left over. That's where that investment part comes into play on a cash flow statement. Maybe he wants to invest into a certificate of deposit for the business, which you should be able to do at most financial institutions. Just like us here at Fifth Third Bank, you can open a certificate of deposit, earn a better rate than what a normal savings account is probably going to pay out, and that way your business can earn money on its money, right? Earn cash on your cash. If you're not going to use it, if you can part ways with it, maybe you out of that 15,000, you decide to maybe invest 5,000 into a certificate of deposit that's maybe tied up for, let's say, a term of 6 months. Now you're earning additional income for your business, right, for the next 6 months. And as long as things are going well and you don't need to tap into it, just leave it there for the term, and you earn a pretty good rate of return on that, versus just keeping it in a savings or a checking account. So I wanted to make sure I covered that part, because that example didn't really talk about investment, but it did talk about the financing. It talked about the operations. Those were all part of that, because he had an existing loan or line of credit, and he had operation expenses. So just to wrap up, in summary, business financial statements are vital documents that help business owners understand their business's past, present, and future. There are many uses for business financial statements, such as showing lenders and investors the value of your business. And third, but not least, 3 common financial statements used by small businesses are balance sheets, profit and loss statements, and cash flow statements. That's what we just went over. And I'll give you a great example before I turn it over to questions. I like to talk about an example. My wife's got a best friend, and she loves to make tumbler cups. She makes tumbler cups, and then she goes out and sells them to different market events up here in Fort Wayne, Indiana. There's a lot of events going on almost every weekend across the city, and she's like a vendor essentially. And she's provided a table and chairs, and she just sets up her tumbler cups. And but I tell my wife, and I try to tell her best friend, I'm like, do you know the inherent cost of what you're doing? Do you know your cost? Do you know how much it costs to make a cup? Because she sells different size cups. It's like, well, what's the cost of a 20 ounce? What's the cost of a 32 ounce? All right. Do you know how much you're making it's just like she does not really know what she is making, essentially. She's not factoring in the time the cost of making these cups when she sells them. And I challenge her all the time. I'm like, you really need to know the cost of this and how much you're actually, making, because in the end, I don't know if she has any clue. And that's the whole point of these financial statements. It gives you a great idea and it shows you how truly profitable you are from past, present, and to future. Okay. And ultimately, I'll say this: if you don't have a CPA, get one. All right, because they can help you with these financial statements. But if you don't have a CPA and you don't want a CPA, I would suggest getting QuickBooks. At the very least, invest in QuickBooks, because QuickBooks can ultimately help connect all your bank accounts, all right, and connect your bank statements and help populate some of these statements that we just talked about. Okay, so a CPA is very important to have in your corner. There are 4 people you should have in your corner. I am one. You need a banker. You need a CPA, as I mentioned. You should have a good business attorney. All right, and then the 4th pillar is you should have a good insurance agent. You're going to need business insurance, no matter what type of business you have. All right, those are the 4 pillars: banker, insurance, attorney, CPA. Right. All right, that is all I have. I'm gonna check the chat room here. Looks like we got some few things.
There's a couple on question and answers, Sean. One is, what would other expenses be when you're talking about the profit and loss statement?
Oh, yeah. Oh, God, that's a really good question. Other expenses. I would say, I don't know, Bill, correct me if I'm wrong. It's been a while since I took accounting classes. I would say that's where maybe you list if you had to travel. Let's say you want to, track your travel expense. Maybe maybe smaller expenses that aren't just like taken, like, just they're just minuscule expenses that you want to track, and maybe your CPA can help you, account for, or QuickBooks could help you account for. If you have, if you have employees and they are driving their own vehicles, or if they're provided company vehicles, maybe you're tracking the gas that you purchase, for example. I think that's where that would go. That's a great question. It's just, you don't want to put your payroll, you don't want to put your loan payments, you don't want to put things that if you had to buy equipment or if you had to buy inventory. That's not other expenses. That's overhead in my book. Great question. I hope that answered that question. And let's see. We've also got CPA and lawyer cost. It depends. Great question, Angelina. CPA and lawyer cost, it varies. I'm not sure where you're at. I would just, it'd be worth looking into and reaching out, and don't sign up for anything. Just ask, what is the cost of having them on retainer or using their services. Petty cash, that could be other. I can't remember if that's an other cost. That's a great question. No, I meant, do those costs go into the other cost category? Yeah. Okay, I gotcha. Okay, I hopefully I answered that. Yeah, like other expenses are just like those truly like smaller expenses that aren't like, they're just very minuscule compared to other expenses. Interest payments, yes. Yeah, once again, it's kind of like, refer to a CPA. This because, I'm not a tax expert. I took a couple of accounting classes in college. So they could, I think interest payments actually has its own, that's its own line item, I think, on a statement, to be honest with you. Training, referral, group dues, one-time expense, or other. Oh, thank you, Jan. Appreciate it. Other expenses that aren't recurring operating costs. There we go. Yes. All right. So thank you, Simone and Jan. I appreciate it.
One other question, Sean.
Yeah.
Is there anything you discuss significantly different for a nonprofit small business?
That is a great question. For a nonprofit, hold on. I think I have, trying to remember if I thought I had something on nonprofits that we look for. That is a very good question. Let me see if I've got that still. Let's see. Because nonprofits are a little different. Let's see if I still got that. Can't remember if I still have those notes.
Or you can pay salaries out of not for profits, but you can't take, if the revenue is greater than the expenses in a not for profit, it has to stay in the not for profit. You can't take it out.
Oh, when it comes to like paying folks.
Correct.
Yeah. I know there's like certain rules for them to keep that status, so to speak, so they can't, there's some things they can still do, and then some things they can't. I know, there's just for lending purposes, for me as the banker, it's a little different with what we're looking for. With a nonprofit, if a nonprofit wants to buy new space, we'd be looking at, obviously we need financial statements, what we talked about today, but we also need to look at where's the money coming from, and is that money still going to come through in the future, right? So nonprofits get grant money, right? Is that grant money still going to come through in the future, right? Or is it guaranteed for the next 3 to 5 years, let's say? That's something that we got to take into account with underwriting. If a nonprofit, for example, wants new space and they need some funding and lending. So, let's see. I agree, Belinda. Great question on nonprofits. Angelina, just real quick, I'd like to start a K through 12 tutoring business. What sorts of insurance seems wisest to secure? Great question, Angelina. Reach out to an insurance agent. I can't answer that question. I just saw that. Great question. Ask it. If you have a personal insurance agent, they most likely also sell business insurance. So ask your personal agent, because they might do business insurance anyways. That's a great question for them. Jan says nonprofits can retain excess revenue in a contingency account for future programs and emergencies. Thank you, Jan. Jan is very informative today. Appreciate it. Ed, oh, there we go. Angelina, there you go. Ed can give you some info. Boom. That is good stuff. All right, Bill, what other questions do we have? Oh, you got the Q&A right there. Let's see.
Yeah, I think we've covered most of those.
Yeah.
Please repeat the 4 individuals that you need to have, but they've already remember that. So I think that's
we're good there. Okay. Oh, repeat the 4 individuals. Yes. I call it the 4 pillars. I think the SBA actually has a term for this. I forget. One of my contacts at the SBA, it was part of their presentation. I just call it the 4 pillars: insurance agent, banker, attorney, CPA. Yeah, I wish I'm not trained in law, accounting, or insurance, right? That we all play our part when it comes to helping small business owners. And we all have our specialties and we all have our training.
Your
So-
SCORE calls that a business team, and they add a fifth one to it, and that's a mentor.
Bill, that's what Bill's for. There we go. Or the wonderful volunteers of SCORE, right, Bill?
SCORE, SBDC, whoever,
Yeah.
Women's Enterprise.
Yeah. Oh yeah, WEOC. Yes. 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 So hopefully I wish I could have answered. Those are great questions, guys. But that's why at the end I was like, let me mention who you should have in your corner, so to speak. And I'm glad Bill included the fifth one, very important one, having a mentor. Because yeah, I mean, you all want to grow your business, right? Or maybe you're just starting out, and these are the resources you need and the people that you need in your corner. And honestly, half, 3/5 of what you need, you should already have access to. You should already have a bank or a banker, right? You should already have an insurance agent. And you got Bill and the fine folks at SCORE, or maybe Women's Enterprise. You got folks in your corner. The other two, you're gonna have to seek out if you don't already have them, which is an attorney and a CPA. And I know there's an inherent cost to that. Hopefully there's not a cost to just have a conversation, but once you reach a certain level, it's just important to have those two folks in your corner as well, an attorney and a CPA. It will make your life
most
easier.
bar associations provide some free information periodically, so you might want to contact your local bar associations to see what you can get pro bono there.
There we go.
Great job, Sean. It's follow up. We'll be having a webinar on the 21st. We call Lean Canvas, which is a quick idea evaluation. Go through 9 steps of how to evaluate a product or an idea. And then on the 22nd, we have a learn the basics of Google Ads. And on the 29th, we have launch your business with customer focused marketing. And again, those last two are Google type presentations. So appreciate everyone being here. Appreciate the job you did, Sean. So thank you all.
Thanks, everybody. Have a great day.